The median price of condos and townhomes in Jupiter, Florida is now $532,500. That is down from $570,000 in June of 2023. Welcome to the July 2024 Jupiter, Florida Real Estate Market Report. Data in this video should be helpful and applicable to anybody interested in buying a condo or townhome in Jupiter, anybody interested in selling a property, condo or townhome in Jupiter, anybody who's generally just curious about the real estate market in Jupiter, or of course, anybody looking for a Jupiter Realtor. My name is Casey Prindle, your Jupiter, Florida Realtor. If you are considering buying or selling real estate in Jupiter, whether it's next week or next year, the first thing to do, go ahead and click a book the call with me button that's right down here in the description. That's going to set up a 30-minute phone call between you and I. You can tell me all of your hopes, dreams, and aspirations, and I will try not to crush most of them and make you feel all warm and fuzzy inside at the same time. It's honestly the best way for you and I to get to know each other is just to hop on a quick phone call. If you already own a property here and you're either just curious about the value of it or you need to know the value of it because you're considering selling it, best thing for you to do there, down below in the description, click the free home evaluation or free home valuation button. That's going to send a page to you that's going to ask for your address. Go ahead and fill in your property address, email and your phone number. It's only going to come to me. It's going to give you the valuation immediately. It is computer generated, which means it's going to be totally incorrect. And you and I are going to have a discussion about what your real value is, not what the computer says your value is. But it's a good way for you to raise your hand and let me know that you do need some assistance and an easy way to get in touch with me. People are always asking me, what do I think the condo and townhome market in Jupiter is going to do? And my common refrain is, look, I have no crystal ball. I don't know what it's going to do. I never know what real estate's going to do. That being said, I do have some thoughts and ideas about the market. I'll run through those at the end of the video. So let's go ahead and get through the data first, and then I'll give you my thoughts at the end. All right, you guys ready to go? Here we are. Median sold price, $532,500, right? Down almost 10% month over month. So not a great stat, but still pretty much, I would say, on the kind of the higher side of the chart. I wouldn't say it's totally unhealthy. I pointed this out in the single family video. It's more prominent here, and I want to point this out again. So see all these little peaks? Here's our line. If we drew straight across where our median price is, see all these peaks above that line? Those people are all what you call trapped sellers right now. They're underwater. The lower this gets, the more underwater people that you get. All right? So you use that data in two ways to play it. I'm not talking about distress levels this isn't, please don't ask me if this is 2008 again. I can't even have that conversation. It's absolutely not. What this is people who aren't going to rush to sell because they don't want to take a loss. They very likely bought in cash though, so they don't have to sell. You use this data as a seller in two ways. The first is, if I'm close to this line, if I'm going to have to take a loss shortly, if I don't sell and my time horizon is pretty short, it's better for me to get on the market now than it is to wait. If my time horizon is long, look, real estate goes like this for the most part, right? Up and down. So if you can wait it out, wait it out. But I think it's something to be cognizant of. I want to draw it to people's attention. And look, if you're a buyer, here we are. We got some good news for you. Prices pulled back a bit. Again, I don't see prices cratering, but we'll get into my crystal ball predictions later on down the line here. All right, total number of properties sold. I pay a lot of attention to this because at the end of the day, what else really matters besides How many people are actually transacting? How many properties are actually changing hands? You know, in a hot market, you have 160, 150 properties trading hands. We had 44 trading hands. How concerning is this? I mean, if you look back here historically, I would say this is pretty concerning, right? Look at the lows. We're right there. This to me is pretty concerning. Down 33% month over month. Went from 92 sales to 44 sales, about a 50% decline since April. Year over year, does that look a whole lot better? Well, from 77 to 44, that's what, a 40 some odd percent decline? I don't think that's great news. If I'm a seller, this is concerning to me. If I'm a buyer, this is good news. You know why it's good news? Because it probably means that sellers aren't seeing a whole lot of offers. It means a whole lot of people aren't transacting. It means sellers probably just aren't seeing a whole lot. So, if I'm representing a buyer, I know going into negotiation, unless there's a real good reason for it, like the price, the property's just priced below market and it's obvious to everybody and there's 5 offers on the table, unlikely event, but let's play it out. The more likely event right now is that a seller expected to see an offer, hasn't seen any offers, and is now probably starting to get a little bit nervous. And I know that I'm the only one coming in with an offer. You think my offer is going to be at market or above, or at ask or above ask? Not if I'm representing the buyer. If I'm representing the buyer, I'm going to show you this. And I'm going to say, look, I know you don't have a whole lot of offers. So what's the real number? You know, it's just a negotiation tactic, and right now I think you take advantage of that. And if you're a seller, again, be smart. Price your property on the lower side because you know very few properties are transacting right now. All right, list to sales price. For those of you that haven't watched any of my videos before, don't really know what this is where a property actually closed relative to the original asking price that was put out there. So if something was listed at 100,000, the average says it's closing at about 95% or 95,000 of that 100,000 original ask price. Here's why this one's important to look at, is because it's going to tell you who controls the market. Look it up here, 101%. If a property came to market and you even offered asking price, data tells you weren't even getting it. You had to go above ask, right? Here we are down here. We're through the lows and going down. So what this says is a few things. It can say that sellers were overestimating the market, and sellers came in and said, no, I think we can sell my property for more than you think it's worth. I think it's worth more. Well, let's go with the high number. And the property didn't sell. And they had to reduce and they had to reduce, and then eventually they sold. So the way that you use this data, in my opinion anyways, is to recognize that if you're a seller, you're likely going to have to negotiate. So expect that the offers aren't going to be at your asking price, and expect that you're going to have to negotiate. Again, on average, for the most part, you're going to have to negotiate about 5% off your listing price, depending on how good or bad you did. Now, don't use this as a hedge, please. I've had people do this to me. Don't say, well, I want to list at 105% of your recommended price, so I come in at 100%. Please don't do that. Don't be that guy. Then I have to argue with you. I don't want to do that. Just use the data for what it's intended for. Understand that you're likely going to have to negotiate, and be okay with that, because honestly, if you negotiate, your property's going to move. If you're unwilling to negotiate, you're probably going to get stuck for higher days on market, and that's the way to look at this. So, before we go on, if you are interested in buying or selling real estate in Jupiter, please click the book a call with me button below. What that's going to do is set up a 30-minute phone call with you and me. Have that with me sooner rather than later. I don't care if you think about selling in a year or 2 years. Have the conversation with me now and tell me, Casey, look, this is my product, this is what I have, this is what I'm thinking, and let's just have an open conversation about the real estate market. Same thing if you're buying. If you're buying, you may have a million questions. You just don't know who to ask them to. And you probably shouldn't just start surfing the web looking at properties before you've gone through the nuts and bolts with me about how do you get to the point where you should start searching. And so please, if you're at all thinking about transacting in real estate in Jupiter, click that button. Let's have a phone call. It's the easiest way for me to get to know you and you to get to know me. And it's the easiest way to move forward. So, speaking of moving forward, let's go on. 38 days on the market. I'll be honest with you, this surprised me. What you expect when transactions slow is you expect this number to rise. You don't expect it to go down. So this is a big surprise for me, right? 38 days, down 32% month over month. It's a big, big dip, right? Now, for those of you who don't know, this days on market, it only encompasses the amount of days that a property was active on the MLS before it went pending. So this does not include your contract time, which is likely going to be 30 or 45 days. So if you're a seller and you want to know how long realistically from the day I put my property on the market to the day I get money in my bank account, you have to add 30, 45 days to this number. That'll give you a good ballpark. But be cautious with this. This runs across all price points. Every price point has a different amount of days on market, right? Lower the price point, the faster the days on market. The higher that you go, the longer it gets, generally speaking. So I got to know where you are in the market. And again, that's why you want to talk with me so we can kind of fine tune this. But that's what that number means. Bit of a surprise that we went down. So we'll see see where that one continues to go. Median price per square foot. I'm going to keep saying this again and again and again because I can't say it enough. Good stuff is selling. That's why median price per square foot is high. All right. The HGTV, junky, beat up stuff, nobody wants it. I haven't met a buyer who's wanted that in 2 years now, probably. Everybody is looking for, give me renovated. That's what a buyer wants. Buyer wants a renovated kitchen. Buyer wants a renovated bathroom. Buyer wants a property that is and looks turnkey. They don't want to do the make it your own thing. That's why it's logical that the median price per square foot is higher. Because if your property is renovated, you're going to be able to ask more for it. If your property is not renovated, this is a different conversation. You're going to be on the low end of the spectrum. There's going to be very few people, at least from what I'm seeing, that are going to look to buy your property. And I'm not talking about the ones that come in and fire an offer off at 50% of value. That's not. I mean just a real buyer that says, I need a new kitchen, I need new bathrooms, I gotta spend 50 grand. If I gotta spend 50 grand, I want 100 grand less than the value of this property because they gotta do all the work and deal with all of it. So again, it makes sense that we're selling the higher side here. I don't think that's a trend that's gonna stop. I think buyers at this point anyways, they're only gonna want the renovated stuff. So again, this gets into, if you're thinking of selling and you have something beat up, talk to me now because the strategy's gotta be different. And we may want a 6-month run so that you can do some upgrades to the property, just so that you can sell it. You may not be able to sell it at a wild premium, but at least you'll be able to unload it. So that's what we got there. All right, if you do own real estate in Jupiter already, and you either just want to know a value, or if you're thinking about selling, please click the free home valuation button below. That little link is going to send you to a different page. Put your address in, your email, hopefully your phone number. You and I are going to have a conversation about the value that gets spit out to you, how you feel about it, and I'm going to tell you if I think it's accurate or not. Use computer generated. 9 times out of 10 they're wrong, but it's a way for you to raise your hand and for me to kind of start talking to you, get to know you, get you on a newsletter that'll kind of keep you updated on values on a monthly basis. So please do that if you're an existing homeowner or considering selling in Jupiter. On to total dollar volume. Ugly. Just shy of 34 million. Down 29% month over month now. Is that a big surprise when we knew the number of properties that sold was down by 33%? No. Look we're almost at a 50% decline from April. Now you say, okay, well that's an anomaly, Casey. Here's the problem. June of 23, there was 57.5 million in sales. So we're off 40 some odd percent there. I don't really know what to say there. I wasn't expecting this, to be totally honest with you. I thought we were going to be seeing a rebound in condos and townhomes. So it caught me a little bit off guard. But once again, I think this speaks to challenges for sellers, opportunities for buyers. So know what camp you're in. You use this information if you're a buyer, right? It's not a bad time to be a buyer. I don't care about rates. I get it. I hear it I get it. But here's the thing. If rates start pulling back down, a bunch of other people are going to come off the sidelines that all think rates are too high too. And when the rates pull down, everybody rushes into the market. What do you think is going to happen with pricing? So your monthly payment will be better, but what if you had to pay 70 or 100 grand more to get the same property that you can get right now at a discount? Right? So these are the kind of conversations that I have with buyers and sellers. You've got to really know what things look like for you, and I get it. Nobody wants to pay more. You know, high rates not good. I get it. But just understand the broader context that if rates pull back, a lot of people may jump into the market. All right, months of supply. All right, months of supply of Jupiter condos and townhomes. If you've been watching me for any amount of time, I love the months of supply number. For those of you that don't know, or I haven't met or haven't had a conversation with, this was the main slide that I built my business in Fort Lauderdale off of, quite honestly. Understanding where inventory was and where it was going. I ended up selling in excess of $100 million worth of real estate to people who found me on YouTube and my blog before that, just tracking supply. Hugely important, hugely important. So let's kind of get into this. Now, across the country, they say 6 months of inventory is what is considered stable, favors neither buyers nor sellers. Above 6 months of supply is said to favor buyers. Less than 6 months of supply is said to favor sellers. Here's why you don't pay attention to national headlines all the time. We haven't seen 6 months, but this little blip here, right, in 2024. Not in 23, not in 22, 21, 20, 19. Didn't see it. So I would say to you, I think a more fair, 3 or 4 months of inventory, that would be more our center line. So if you look at it from that perspective, then 5.66 months of supply, we're actually favoring buyers. Now I can tell you, without even looking at it that way, I can look at this 12-month change of 35% and tell you, where would you want to be a buyer? A year ago or now with 35% more inventory? 35% more choices than you did this time last year alone. This is really good for buyers. Because again, if the market heats up and this goes then suddenly you're in a thing where, let's say we go back to flat, and you have 35% less properties to choose from and everybody's fighting for those. That's not good for you. No, no, no. But if you're a seller, that's what you want to see, right? So, really important to pay attention to inventory and supply. Let's get on to my thoughts of condo and townhome market overall. I hate to do this kind of stuff. But look, I have a large residential practice in Fort Lauderdale that I spoke about a little bit. I have a large commercial practice that runs throughout the state of Florida. I deal with family offices, private equity firms, and I'm just starting to get into the Jupiter marketplace now on the residential side.
and everyone always asks me the same questions about where I feel the market is going, and it's fragmented. You can't apply what you hear about single-family homes to condo and townhome data. There's a lot of challenges that are coming up, not specific to townhomes, but specific to condos, so we get even more fragmented. So it's a really nuanced conversation, and that's why I hate to kind of do these. That being said, why not? Let's fire away. Here's a couple of things for you. Just in the paper today, there's a 4-story condo building along the beach in Jupiter. It's being bought out by a very large developer who wants to put up a higher density building. Whether you agree or disagree with the zoning variations, that's not what this conversation is about. What it's about is that condo building was so dilapidated and it was going to require so much money from each owner to get it up to where it could function in today's code environment that they decided they had to sell the whole thing out. So I think you're going to see a decent amount of that. This is really going to come up with the milestone inspection reports that came out of Surfside collapse. Buildings are having to do engineering reports. They're learning their exposure. They're learning their reserve shortfalls. There's two sides to every coin, though. I want to tell you this. I just spoke to somebody today down in Aventura who they're looking at a $150,000 assessment on their unit. And she said, I can't afford it. I just need to sell it. And I said, okay, fine. It's hard to find a buyer, but we'll do our best, and that's what's going to happen. Here's the deal for the buyer coming in, and this is what I would say to anybody looking. Look, you're coming into this with the old owner paying for all of your capital improvements. You're going to walk into a building that's had all of the renovations it needs already paid for. So in my mind, there's a lot of buyers getting discounts on properties because sellers right now just need to fire sale to pay some assessments. You mix that together with some insurance issues that condos are having. And what I mean by that is, in order to keep their dues level, they may have gone to a higher deductible insurance policy. The problem with that is, now a buyer coming in has to make a larger down payment because the lenders don't want to lend in a building where the deductible is so high. So we have all this kind of stuff going on, which means there's a lot of challenges in the condo market. But again, this doesn't mean that it's bad to buy one. It doesn't mean that you have to fire sale if you're a seller of one. What it does mean is you need to exercise extra due diligence, far and above what you used to when you're buying a condo. So I'm really digging in deep for people when I get a contract or when I get a listing, to really understand so nobody gets an inaccurate picture. So look, that's what I got. I thank you for watching. Again, this is how I built my business in the past. I'm just doing it in Jupiter. So please don't be shy. Reach out to me. The easiest way, far and away, just call me. I don't know why people are so scared to call other people. Just get on the phone, call me. Tell me, look, this is where I own a property, this is what I want, this is what I'm thinking. If you don't want to call me, but you want to have a coffee or you want to get a drink with me, now we're in my wheelhouse. So let's have a coffee or a cocktail if you're local, and I'll see you guys next month.